Hey, everybody, welcome to our series on the One Big Beautiful Bill Act, where we are going through some of the changes that we are seeing that are going to be most impactful for a lot of folks. And just wanted to talk about these with you. Here is the state and local tax itemized deduction, often called the SALT for state and local tax, the SALT deduction. So, what are your thoughts on this one, Jacqueline?
So I'm actually pretty excited about it. Most people were capping out at that $10,000 limit. And with that, often don't end up itemizing as a result, even though they're paying more than 10,000 in state and local taxes. So this is only from 2025 through 2029. So if you're going over that 10,000 in 2025, it will still benefit you. You don't have to wait until next year. But that limit is going up from 10,000 to 40,000 and then is subject to increase each year for the next few years.
Yeah, that's a substantial increase
Hmm.
from the $10,000, and $10,000 initially sounded like it was a lot, but we're here in Indiana, which is a relatively low tax jurisdiction, and we would see clients just regularly hit that $10,000 cap because you have to add in your income taxes, whether that be state or in our case, we have county taxes here as well. So your state and local, and then your property taxes. By the time you add those in, you're hitting that $10,000 cap pretty fast.
Yeah, and for states that have a higher property tax or higher income tax rates, they're going to hit that a lot faster too, and then lose out on that credit. So it's nice to bring it back. There are some income limits, especially so if your income is between 500,000 and 600,000, it is going to start to phase out. However, you will not lose at least the $10,000 credit.
So that $10,000 is kind of the bottom of the trough that you
Yeah.
would possibly dip during that 30% reduction within that 500,000 to $600,000 band. So that's pretty helpful. And then this is going to increase for inflation.
Yeah, so it will go up by 1% each year for starting in 2026. And that income limit is also going to go up by the same amount. So you're not going to stay at that 500,000 to 600,000 limit and start losing it. Your income can go up along with it. So,
Yeah, and this, frankly, expect this to hit a lot of itemizers, not necessarily just your high AGI itemizers, because this is, like I said, a big component of your SALT deduction tends to be property taxes, so it's not even contingent on your income. And this will be very interesting to see, although we also within this bill saw an increase of the standard deduction, now that we don't have this $10,000 limit, will this start to bring in more folks that will now itemize as a result?
yeah, it'll be interesting to see, especially going back to pre-Tax Cuts and Jobs Act when so many people were able to itemize and then they kind of lost that ability because the standard deduction increased so much. Now it'll be interesting to see whether or not we get a lot more people itemizing, specifically just because they're not capped at how much they can claim for what they're paying.
Yeah.
So,
So before the 10,000, before this increase, and we had the $10,000 limit, you saw a lot of states doing what's called this PTET fix, which was the pass-through entity tax fix. Now, ordinarily, what happens is, let's say that we are invested in an S corporation or partnership. Those aren't tax-paying entities. They would just simply push the information up to the individual shareholder or partner, and that shareholder or partner would then pay taxes, and it becomes their personal liability as a result. So what was happening is, if I had a business that was pretty successful and it was pushing up its partnership or its S corp income to the individual level, I had to pay tax on all of that income, and then I had my property taxes and personal income taxes as well that were all getting hit with that same $10,000 cap. So a lot of states, what they did is they came up with this idea of, well, let's give entities the ability to make an election to pay the tax at the entity level as opposed to passing it up. And this is just a state tax impact. So the entity would then pay the tax, which is then deductible on its federal return because it's state taxes that are paid that would be ordinarily deductible on the federal return. So you were basically pushing that $10,000 cap and back down into the entity return. And the entity returns never had this $10,000 cap. So there wasn't an issue there. And this was a pretty controversial item when legislators were going through the bill to see, do we ultimately pick this up? Do we block out this PTET thing? And it's there. So this mechanism is still available. And I don't know if this is something that you've looked at for your clients, but at least for me, I'm telling my clients, you probably just want to leave your PTET election in place.
Yeah, if it, I mean, it's still beneficial for them, and now they won't max out on the 10,000. It's still beneficial to use.
Yeah, I think it leaves that $40,000 available to capture as much state taxes as you possibly can to benefit from on your personal federal income tax return. And the one piece that a lot of folks tend to miss out on is while we hyper focus on income taxes and property taxes, ad valorem taxes are also includable. So if you have, take a look at your particular state's car registration. Here in Indiana, we would see excise tax, and that excise tax is based on the value of the vehicle at the time it was placed in service, as opposed to just being a flat tax. And those ad valorem taxes are also includable. So, this is a campaign exercise that I have with my clients right now to reach out to them and say, look, keep every receipt. And remember when you used to give me your registration back in 2016? I want it back again. So now we've got to take a look at them.
Yeah.
So kind of fun. So definitely add up all of your itemized deductions, and this could be a real game changer for you in terms of whether or not you will itemize. So you'll want to keep track of that. And yep, definitely make sure you keep track of those old registrations sitting in your glove box. They do have some value. So hang on to those. All right. That's it for salt. Thanks for watching.